Trading live with Oscar Carboni. See the way I flail my arms? I seen a guy on TV down on the trading floor yesterday. He was on, I don't know, Fox News, one of these panic stations. And he was on TV speaking to them, and he was doing all this stuff while he was speaking. And I said, I have a feeling you've been watching my videos, pal. So, anyway, futures trading can be very risky. I'll get to that in a moment. But first, I have to tell you what the damn date is, right? So, this video is being filmed on Thursday night for trading Friday. That is June 16th, 2017. As you know, as I said, futures trading is extremely risky, can absolutely cause substantial financial loss, and does a lot of times. But lately, boy, has that OMNI just been kicking butt or what? It had a one-day slip-up in silver, and how was that punch back today with the gold and everything we touched? My goodness. Thank you, OMNI, for the Midas touch. You know how this works, though, right? Head down, nose to the grindstone, on to the next trade, because the moment we think we're good at this, we're dead. So, thank the Lord for what we've got. Let's hope it works tomorrow. In any event, come on down to livewithoscar.com. Come into my free live trading room, and you can pray with me that your trades work. We'll see what happens. So how do I explain what's going to happen? All right, so if you are the average analyst and you know how to look at a chart, do technical analysis, look at indicators, you are absolutely getting ready to sell the S&P tonight and the NASDAQ. I get what the analysis looks like. And that is why I'm who I am. Now watch this. Oscar says we are calling favor on a dear old friend, or from a dear old friend, if you will, and that dear old friend is called the swing day. And I got to give it a round of applause, because I have to say, this is a dear old friend. A shout out to traders in my room like Oli and Roy and a bunch of you guys that have been around forever, since 2007 when I started this. You know what this is, right? You know the power behind it. And you would also recognize, if you know about the swing day, and many, many thousands of Omniacs know this, there are rules of engagement that go along with the swing day that must be adhered to. Otherwise, this could end up costing you a bundle instead of helping you to gain some points. So, some weird way I'm going to come out and say, at least in these two, emini, S&P, and NASDAQ, we are going to call them swing days. We're going to expect this dear old friend of mine to work, and we expect the market to give us a chance to get in on the long side, rally up, let us get out, and whatever happens after that does not matter, which are part of the rules of engagement of trading a swing day. More about that at livewithoscar.com in my free live trading room. If you want to learn how to use the swing day, what is a swing day, and why you should pay attention to it, join me in my free live trading room, and I'll tell you more about it. One thing I will say is why it's called a dear old friend, and once again, why I've referenced a couple of my Omniacs, and there are so many more. I'm sorry I didn't mention your names, but that's not what this is about right now. It's about the swing day. It's a dear old friend because it is a trade or a type of trade setup that if you are one of the gentlemen, ladies, traders that have been around me since the beginning of these videos, you have seen that swing day work magic time after time after time, and it just worked in leaps and bounds. It was like Superman, you know what I mean? It was like the super trade. You couldn't get it wrong. I felt like underdog every time we used it. But you know, right around 2013-ish, it just went away. 2012, it just stopped working, and it went away. In other words, the swing day that used to be so countable started to become a loser, and we abandoned ship just like that, which is something we're known for. Wait, we don't beat a dead horse. The swing day stopped working. We used to count on it day after day for years. It stopped working 3 times in a row. I gave up. Goodbye, swing day. Never used it again, and I'll tell you why. If you come on down to livewithoscar.com and hang out with me in my free live trading room. Okay, enough of that. Crude oil and soybeans, both of them we have been hunting, if you will. Omni has been on the hunt on the downside, and boy, it's been catching some decent trades in both. If it doesn't catch the trade, it calls it properly. If it does catch the trade, it catches a nice one. So we're going to stay with that pattern for now, and there is this. Yes, I'm calling for a swing day, and I'm calling for a favor from an old friend to make the market go up long enough for us to get out of a trade on Friday. We are day traders. But there's Apple. Apple is at the Omni average. Apple usually holds very well at the Omni average. If Apple gets under the Omni average, there becomes a problem. So Apple is interesting because it would be counter of that right now. So I will show you that chart. You'll understand it after the chart segment. Traders, if you like the analysis I show you in these videos, if you have been learning the art of technical analysis from me, you have seen nothing but the tip of the iceberg in these videos. This is layman's term. This is technical jargon that children can understand. I show you very simple techniques in these videos, and I know they work really well and they help you, but it's only the tip of the iceberg of what I have to share. If you would like to join me on a 4-day seminar held live in Las Vegas, I'm holding one in August. It is the last weekend of August. There are only 5 seats ever open at each OmniCamp. I handpick from a stack of, generally, a decent-sized stack anyway, of applications, and you traders fill out a simple application. I go through them, I pick and choose the ones I want to call, and I handpick 5 of you for a 4-day seminar. If you would like to learn the art of Oscar's market navigational indicator, the Omni, if you would like to learn the art of the Omni for yourself and not have to worry about me calling these trades for you every day, you come fill out an OmniCamp application. Join me here in August. Only 5 seats open. Fill out those applications because those 5 seats are going to go, and that's it until the end of the year. So if you want to join me, fill your apps out. And now, the part that I like the best. With no further ado, let's go look at some charts. Okay, a favor from a dear old friend. Come on, buddy, I'm calling favor. Please give me one. First of all, we're in a beautiful F-flag channel. Here's the flag. Here's the I guess what I would call the flagpole. Little flagpole turns into a big flagpole. This is my flag. So you're sitting in a nice big flag, right? You can see that. But the purpose of this video was to show you something called the swing day, a dear old friend. And it starts to set up like this. Now, this is the S&P, the swing day I expect to use tomorrow. Let me show you the very same chart and identify a couple of others that happened just recently. A setup like the one I'm expecting tomorrow happened right here, and up we went. A setup like I'm expecting tomorrow, and up we should go. A setup like I'm expecting tomorrow happened right here, and up we went. So I went, I've looked back for a while. I've been keeping my eye on this swing day, and interestingly enough, I thought today was a good day to call it. So we are going to go basically against all technical analysis, against everything most of us believe in if this is what we do for a living, and we're going to call the upside in emini, S&P, and NASDAQ for trading on Friday. Now, of course, our stops will be in. They will not be extremely large. It will not wipe out anyone's trading account that I know of if this trade doesn't work. But because you see this up and this one, it tells me that the swing day has been working lately, and there's no reason why we shouldn't expect another one to take place on Friday. So, that's what I'm expecting in the E-mini S&P. Now you've got NASDAQ. Let's give it another reason. Bounces off the line, creates the channel, bounces off the channel, bounces, doesn't even get to the channel, bounces anyway, and here we are at the channel. So, 2 things. Granted, we've got a bear flag, and we just fell out of it. Hey, but maybe it's over. Maybe that's all it was supposed to do and hold this line. So because we are in a big, booming bull market, I have to find reasoning to think to buy the dips. If we start to really bend over and end up down here somewhere, you will find me telling you maybe the top is in. But that's not the case at the moment. That's not where we are. Where we are right now is holding a very powerful trend line, and I have to come up with reasoning for buying dips for now. So if that's not a good enough reason for you, nor is the swing day, I advise you to just sit on the sidelines and do nothing tomorrow. Otherwise, we are going to look at this as a possibility of holding here and the possibility of a swing day taking place in both E-mini S&P and NASDAQ. Now you've got the Dow Jones Industrial Average Daily Bar. What can you say? This was previous highs, and if we look at this dashed line, previous highs were here. We're trading up here in this wonderful channel, way above previous highs, in a wonderful bullish channel, right? What more could you ask for out of this channel? It just works really, really well. So, For us to just call, hey, you got to start selling it, the top is in, if you ask me, would be crazy. That wouldn't be an analyst. That would be someone making predictions instead of projections. I prefer to make projections because I don't make predictions. That's for crazy people. Projections come off of a chart, and you've all seen me make these time after time. So once again, I took that exact same chart and I blew up that little channel I just pointed out to you. It's not such a little channel. I mean, this is a daily chart right here. Here is where we are as of Thursday afternoon. Friday, we're going to open. Shouldn't we hold right here? You in the audience looking across. What do you think should happen when we hit this line? Because it hit the line and it rallied, and it hit the line and it rallied, and it hit the line and it rallied, and it hit the line and it rallied, now it hit the line again. What do you think it should do?
Rally!
Yes, it should rally. Look at you. You didn't even answer sitting back there. It should rally. Now, will it? Well, I don't know. That's what stops are for. If I knew, well, come on, it'd be the last trade we ever do for the rest of our lives. But that's what should happen. So giving more credence to our swing day in emini, S&P, and NASDAQ. Again, I get it. The analysis is set up to call for a downward trade. So if you're looking at me and listening to this video and thinking I'm crazy, I get it. But the swing day is an Oscarism. So let's see what happens. Crude oil. ECLN17. My goodness, has this been a very, very nice chart. The crude oil daily bar. Left shoulder, head, right shoulder equals a head and shoulders formation. I have been showing this to you for quite some time, and if you recall, since we came up here, the OMNI made a call, and the OMNI's call was we would never get to 57 before we get down to 37. So OMNI says this will not happen before this happens. And what happened so far? We dropped from here to here, started a little, and dropped to here, on our way to 37. It is absolutely acting like this target will be nailed. Traders, you can't really do better. This call was made in the 50s. We are now in the low 40s, heading to the high 30s. It is exactly what should happen based upon the technical picture and the projections that I received from such. So here you go on the crude. Nothing goes straight down. So you may get some periods where it goes up a little and jigger jags, but down we will go eventually and end up at that level. So that's your crude oil. And I mentioned that we had soybeans as well. Now soybeans have also been in a bit of a tailspin, and not just two flags. If you look at this, here's a flag. Market cracks, breaks down, makes another flag. Right here, boom, boom, boom. Nice big long extended one. Market cracks. Makes another flag, nice and sharp. We're outside of the flag right now. So until this pattern stops, 1, 2, 3, we must expect that to continue, right? We are creatures of pattern. In fact, technical analysis basically is recognizing repetitive patterns. Right here's a little baby flag. I don't know if you people recognize what's happening, but even that's a little flag. Flag, 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 flag. They're all over. So if when you fall out of the flag, you go down, it looks like we're out of the flag. So likelihood is we will go down. Now, if soybeans end up going higher, maybe the flag is going to do one of these, expand a little, and just take longer to get there. But it's still a flag at this point, and we will respect what we see and call for the downside. So those are the charts for the commodities, and then there is this. The difference between what I just showed you in the NASDAQ and S&P is that you can absolutely make a case for the upside, and it's not as easy at this moment to make a case for the upside in Apple. Problem with that is how goes Apple, how goes the stock market? Usually, certainly NASDAQ, we call it NAPPLEDAQ. So if NASDAQ, which looks very much like this, and Apple tend to trade together, I kid you not, right now the NASDAQ has this bar and this little flag, and it fell out of it just like Apple. They look almost the same. There is a difference, though. Apple is at my OMNI average. When it was under the OMNI average, which is behind here, it's under the average, you'd note it stayed under, and then finally it breaks out, it gets above. Holds the average, holds the average, holds the average, holds the average. Boom, we are at the average right now. So history tells us it will hold the average and will go back up. That's what history tells us. Will it do that? That's an entirely different story. So there is a bear flag in Apple. It is below right now, the OMNI average. We need to see Apple get up tomorrow above the OMNI average and set up a nice strong day, which means we need to see the NASDAQ have that swing day effect. Let's see what happens. They both will affect each other. If you don't understand the relationship between NASDAQ and Apple, come on down to livewithoscar.com. Hang out in my free trading room and I will try to explain it in detail. So traders, you've seen the charts and now you have to be a hardcore believer in the swing day, or please don't take this trade. The trade is to buy. I get it if you're doing your analysis, if you're doing the Omni, if you're an Omni Camp grad, you're going, Oscar, what are you, crazy? I get it. So only if, once again, you are a hardcore believer in the swing day and you will follow the rules of engagement, which is when you get the profit on your swing day, you run, then come on down to Live with Oscar and follow this trade with me. Everyone else, do what you got to do tomorrow. In oil, down we should go. If we find a good spot in, we will take it. Soybeans a little iffy because it's Friday and soybeans can get weird on a Friday, but the flags are there, and a flag is a flag is a flag, and we will hunt those flags down until they stop producing. Apple, will it get back above the Omni average and head up with the NASDAQ and the S&P tomorrow? Or, honestly, and I never hedge in these videos, is Apple below the Omni giving us an omen? Maybe it is. Once again, I have to explain. The reason why there's a green arrow. The reason why I say we're going for the swing day. As an analyst who's been doing this for 35, now 36 plus years, I have to give an argument to the bull side of this market. We have been in a long-term bull market, and it never seems to fail to find legs and go up on dips. I cannot stand here and scream the top is in, let's get short, when I have a technique that tells me that we should be buying, when I'm bouncing off of a line that have bounced and bounced and bounced and bounced and continuously bounced during this bull market, and we're at that line like I showed you in NASDAQ. I have to make an argument for the bull side. If this thing starts to beat us up and it starts to show us bearish type action, you know I will be the first to call this thing dead, stick a harpoon in it, and see it go down. For now, I say Apple holds the average because it's supposed to hold the average. That's what it does. And this will turn out to be okay, at least for part of the day, because the swing day, if rules of engagement are used properly, should allow us to get out of a trade with a win after buying. We'll see what happens. Stops will be in. LiveWithOscar.com. Make sure you join me in my free live trading room. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves keep those emotions at bay, and believe me, I know that's not an easy task, but try this. Say this to yourselves every morning, every afternoon, every evening, and you know what that is. Stops are in. Emotions are out. Rock and roll. LiveWithOscar.com. I will see you in my free live trading room. Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.